It's always fun to be with you guys here at FX Street. I really enjoy being here. I think, no, really, I mean, I think FX Street is one of the, if not the best forum out there. I mean, it's, okay, no, my pleasure, Ray. Okay. Okay, now, Genius, I like your name, by the way. I trade both long-term and short-term. We do trade during the day, the intraday. We do the short-term trades, and we're going to do some short-term trades today with you. And we also trade long-term. This is a trade that you see right there. This is one of the positions that we took this morning. We're still long in that position. We're long the dollar yen. We took the trade. I'll show you. This is where we bought it. Was the buyer? Yes, please vote. This is where we bought the trade, the dollar yen, and we're still holding it up to now. And we're looking. The way we trade, guys, is and I want to discuss, this want to be the topics that I want to discuss with you. If you look at the trade planning session that we do now we do it on Saturday instead of Sunday. What we do, we look at our positions. This is our position, the long-term position in the dollar. This is the dollar index. We always look at the primarily every week we look at the indexes, because the index is the actual currency against a basket of all the other currencies. So you're looking at the dollar index versus all, and this dashed blue lines mark our trades. So this is where we entered long the dollar. This is where we closed it. If it's a blue line, then it's a winning trade. If it's a red line like here, then it's a losing trade. So our last trade was in the dollar. We were short the dollar as of 79.02, and we closed the short on Friday on the 11th, because now it is technically reversing to the upside, and this is where we started buying and closed the trade for the US dollar, and now we are long the US dollar. So that is part of the work that we do every Saturday now. We look at the index for the yen, we look at the index for the Swiss franc, we look at the index for the interest rate for the bonds. These are our trades. And we begin to identify which are the currencies that we need to be buying and which are the currencies that we need to be looking at selling. So, for example, the Swiss franc, fundamentally now, or technically short the Swiss franc in general. And Saturday at 2 o'clock GMT. So Saturday at 1400 GMT. And for example, so the Swiss franc we're short, the Japanese yen we're still, actually we got also short on Friday. The British pound we don't particularly have any position right in it generally right now, but it is still much stronger than the dollar. And this is what we do, and this is the topic that I want to discuss with you guys, what you see here, the plus and the plus minus and all that stuff. As you all know, when you are trading foreign exchange, you are buying one currency and selling the other one. You're buying one currency and you're selling the other one. So if I want to be buying something, and with the proceeds of my sale of the other commodity or the other currency I am buying with it, I want to be able to buy turn off these positions. We basically want to be buying the strongest of the strong and selling the weakest of the weak. So for example, you would be looking at any position, let's say the dollar yen. In this case, this is the dollar yen is the combination of being of the yen index and in a way, the dollar index. So when I say I am trading the dollar yen, this means I am going short the dollar like this, and at the same time I'm going long the US dollar, I'm sorry, the Japanese yen. And this is what you're looking at when you begin to short. The moment you create the short, this is your spread between the two currencies. This represents that you're being long the Japanese yen, and this downward trend line means that you are short the US dollar. Now that represents the price movement of the yen going up, and that represents the price movement of the US dollar coming down. And again, if you're buying the strongest currency and you're selling the weakest currency, what will happen is the strong one will continue moving up, the short one will continue to go down, and therefore the distance between the spread between the dollar is going to widen, it is going to increase, and that is how you make money in the spot cash. You want to be buying the strongest of the strong and selling the weakest of the weak, because now this becomes the distance between those two lines represents your gain or your profit. So rather than trying to exert too much effort trying to find an indicator or try to find a moving average, whatever, what you need to do is to identify primarily the strongest of all currencies, and that will be the first one you'll be looking to buy, and then the weakest of those currencies, and that will be the one you're wanting to sell. And therefore it keeps on going, and the distance between the two lines or the two prices that you have gone keeps on widening, and then more and more pressure, more and more profit you're going to be making. So that represents, and that's why you have to be focusing on the strength. So for example, Jack is asking about the euro. So this is what we did in the euro last night in our Saturday, and I will go to the euro chart. And this is the euro index. And as you see, the index for the euro, let me turn off the positions. The index for the euro, we have what we call a structural point at the 130. That's based on the index. It's slightly different than the spot price, but it is a structural point of 134, or let's say the 139.35. Once it breaks that, we are looking for capitulation to the downside. We're looking for it at least to come down and test the 133.15. So right now we are bearish on the euro, and I will show you the trades that we took this morning in the euro. Particularly, again, the two currencies that we traded primarily today was the Swiss and the so this is the, and what we do, guys, I want to show you this also. No, we don't do butterflies. I mean, this is again. I mean, yes, you can do some sort of. This is a spread in a way, and what we do, Genius, is that we try to get in this business to make money. We are trying to, again, to focus on where the money is being made, and so in this case, we create our radar screen, and as you see here, these are what's long is our buying point, and the short is our selling points. We do this every week, every Saturday, and these are the points that we identified from this last Saturday, that we are short the Euro Aussie from, let me put this, we're short the Euro Aussie from 136.50. It is now trading at 134. The Euro CAD from 133.80. It is now 132.80. So you got 100 pips on that. The Euro Swiss, we are short the Euro Swiss, so we're up about 20 pips on that. And the Euro Yen, we're about 50 pips on that trade. And the Euro Dollar from 134, so we're up about 50 pips on. So these are our position, and what you need to be doing right now is to focus on that, on these trades, and these price points are the one that will tell you which side of the market you need to be. So right now we need to be short the Euro Dollar. So for the gentleman that's asking what is our position as far as the Euro now, okay, as you see right here, we are at any blue line, any blue dashed line. There is an explanation, Genius. There is 4 webinars on FX3. It's called Price Behavior. You can go and watch them. And there is also a couple on our website, Training Traders. You can watch them also. It is purely based on the price. And we don't use any technical indicators. We're based on price structure and price behavior. So in any case, right now, for the who's asking about the Euro Dollar, you're looking at now. Thank you, Con. Here is the difference. I might be bringing a different approach. I don't know who's asking that. Michael, I don't do predictions. I mean, I don't feel that it's against my philosophy. It's a philosophical thing. Because if you trade based on price behavior, the first thing that you have to understand is that we as traders are our biggest challenge, okay? And we have to be able to approach the market every day trying to decide which way we are going to trade and how we are going to make money. With that, I also have to accept the fact that we cannot predict the market direction. Nobody can predict the next tick is going to be. You can have what is known as the high probability direction. And you can do your trading assessment and to identify which way the market is going. But what's important, much more important than that, is that you have to accept the fact that since we cannot predict the market, all what our job to do is to anticipate the direction or the price, the movement, if you will. With that, we pinpoint what we call structural points. We pinpoint what we call, and I'll show you what we do. This is, again, this is the way we trade. We identify the long point. This means this is where we are going to be buyers. we identify the short points, this is where we're going to be sellers, and we identify the structural long, these are the big buying points, and the structural shorts, these are the big selling points, and we also pick up the stops either for our long position or our short. So we always have those two positions or two plans, the long and the short. We anticipate the movement. If it trades above my price point, then I'm going long, and this is where I'm going to be placing my stop. And this is, so we are not going to blame ourselves to the outcome of the trade, because we acknowledge the fact that we cannot predict the market. Our job is to make money. My job is not to be right or wrong. I don't care if I'm right or wrong. I absolutely do not care if I'm right or wrong. What I want to be is rich and making money. And in order to be rich and make money is that I do not have to put my ego on the line. If every trade that I take and it doesn't make money, I'll say, oops, I lost money on this trade, I will not be able to come back and take the next trade. With that, I will say if it gets below, then let's say the dollar CAD, or like today, for example, it gets below, let's take the euro dollar. If it trades below, let's say the euro yen, for example, I'll show you the 112.60, and this means if it trades below the 112.60, I'm going to go short, and I'll show you. These are the trades that we had in the euro dollar today for the one that's watching. This is the two trades that we had in the dollar, in the euro dollar. That was the first one at 135.16. We took it short. This is this morning session. And then the second one, we took it at 134.62, and we closed the trade at 134.40. So we're average about 80 pips on that trade in this morning session. So now we're going to wait for this session to see which way we're going to be trading. And that's the basic essence. Now we're not very short-term, Genius. I trade all kinds. I mean, I'm primarily, I've identified myself more of a longer-term trader than being a short-term. But again, we do these short-term trades. They're different. So whoever was asking this question, for us, we are going to go short. This is what I don't give trading advice in the room, but what I'm doing is this. Right now, I'm going to go short.
Order filled.
And this is how we give advice. Okay, so my stop now is going to be above the 134.46. I'm going to put it around 134.50, and that is my stop as far as the euro goes. I'm short the euro. The market is trending down. My stop is above the 134.46. I put it at 134.50, and if the market changes direction and it comes back above the that price, I'm going to reverse and take it to the long side. Now, what's happening right now is my radar screen now, this is searching the market to identify for us the trades that we want to be looking at. So the high candidates for a trade, the euro dollar, now my risk on that trade is very small, so the the dollar yen is very good. The other one, the pound yen, is not bad. The risk is small on the pound yen. It's about 12-13 pips, so I can make it around 20, averaging the 20. What else? The Aussie dollar is very good, very tight range, and the euro dollar is good. The dollar is basically good across the board, and the yen. So the dollar and the yen seem to be high candidates for moves today because the risk in them is small, and you can see that the range is quite tight. For example, in the Aussie Swiss, that is tight. The dollar Swiss is also The Euro Swiss is very good. The dollar yen. Now look at the dollar yen is breaking again up to the upside. So that, and this is what we do, guys, in what we did on Saturday. This is where going to be our buying point. This is our short stop. This is our long stop. This is where we're going to go short. So right now, I can see where all my trade plan is. This is my stop. I just move them because the chart moves. This is my long stop. And this is where I'm going to go short. So now I have all my trade plan in front of me. And now I'm sitting. So I took the dollar yen up. And I'm short the euro dollar. So basically, I'm long the dollar in both. And we can look at the pound Swiss. It's inside the range, no action. So let's look at our radar screen to see what is coming up. Emma, your money is wasted. I mean, if you to buy a software from the company and you're going to take it and lose it. I'd much rather if you understand, take the course, understand how it works, understand how price behavior works, and then if you decide you want to take the software, at least you're learning the skill. So you have to learn the skill to understand how the decision is made, how the software identifies the decision. But again, to the gentleman, the idea trading is you want something that gives you clarity. So right now, as I said, below 134, I'm taking it short, no question asked. I do not predict the market. I anticipate the price movement. Below 146, I'm taking it short. Thank you very much. I'm done. And the software now the software, you see, Emma? Now the software is confirming what I have just done. And now me and the software, which is now my autopilot, is now taking the trade, and I have the confirmation now that I am doing the right thing, because I already did short it, Jack. I already took it short right now. Here, I took it right now when I was talking. I just took it right now short. What do you mean, Lord? Oh, of course not. Of course, because of this, absolutely. Absolutely. I don't care. I'm taking it short. My profit is hopefully is going to be to this next point. Again, if I cannot predict the direction, I do not predict the profit. I follow structure and behavior. Until I have a reason to get out of the trade, I'm staying with it. It's a fundamental thing when I say I do not predict. This is how we here and all the traders in the office here, we have a lot of traders sitting, we all follow the same methodology, is that we don't know. And that's the role of, you don't know. As a trader, you don't know. But if it breaks below a structure point, now you're going to take it short and you're going to stay with it, because sometimes it is going to do this. Look here. For example, this is this morning trades. These are the two trades that we took this morning. This is one, and this is the second one. Okay? What we did is, this morning we took the trade, and as you see the blue lines, once it started sitting like this for a long time, and beginning to push higher, well, that's too long for a day trade. Now it's time for me to take profits. I'll take the profits, and that's the profit of the trade. So he took, and then if it starts moving down again in the same direction, you take it short again, and you stay with it to, even though this kind of, you see this move coming back up? See this move? Let me take this, that move over here, this move, we didn't close it. I stayed with it. Why? Because it's below the market side, but again, as long as it didn't create a reason for me to get out of the trade, I stayed with it, and then it started resuming the direction, and this is where we closed the trade. Okay? So the idea is you have to be able to withstand the moving in the pound dollar. No, the pound dollar. Let me see the pound dollar. Yes, absolutely. Absolutely. It is, the structural point is 159.80 on the pound dollar. The short point 159.80, and the structural point is 159.80. That is a very powerful sell signal on the pound dollar. Absolutely, I would take it short right there. If it breaks it, absolutely. So what, again, as you see, earlier this morning, the beginning of the session, I told you that when we did our homework, and if you go to the blog on FX Street blog that I wrote, everything I said in it is that the dollar is strengthening based upon what is happening in the market. And that's why we're basically, looking at this, at the dollar index. And you guys who doesn't read the blog, I mean, you can put it on RSS and it gets to you or something. You can follow up what we're doing. But again, look at this. This is now, we have a big structural point, which could be a trend changing point at 79.05 on the index, Michael. And that for us is going to be explosive. How low, Jack? Again, it moves from one structural point to another structural point. And as long as for any currency to change direction has to do it on the chart in a specific way. Okay? It does not change direction on a dime. You don't get this kind of V kind of movement. It doesn't. But this kind of action, guys, this kind of movement, I want you to see this kind of movement, going up, coming down, going up, coming down, going up, coming down. This is the fact. That is the one guaranteed thing of how the prices behave. It always moves in a zigzag. It's like you and I breathing. You inhale and you exhale. You cannot inhale all the time. You cannot inhale and hold your breath. And you cannot exhale and don't inhale. This is exactly like this. It inhales and then it exhales. Inhales, exhales. This is that zigzag move is a typical 100% what every price chart does. So all what it is coming down, but this is just taking a breather in the opposite direction. It doesn't mean it's changing its mind. So this doesn't mean that I have to buy and go long. No, it's just taking a breather. And it's exactly like this. It inhales and it exhales. And you have to be with it. So if it's below the structure point, any zigzag to the upside, that's not going to scare me. This is my stop. I took the trade and I'm looking for it to go down. Again, this is the next, the 133.37 is a very important structure point. It goes, as you see, all of you guys that have been with me in this webinar on FX Street for a couple of years now, or a year and a half now, can realize that these price points don't change. And I think last year in April, if you go to one of the webinars that you'll find that one of our structure points, the big selling points, was the 133, actually the 134.46 and the 142.16, and also the 137.46. So right now, if it breaks this, it is coming down. I'm looking at the 133, and that is where, so I'm staying with it until it gives me a shape that it is going to change its direction. Until then, I'm staying with it on the short side. Okay, somebody's asking a question. Hold on, Okay, Bill is asking, do I just sell if it broke through the structure point? Where is my stop? I sell primarily breaking through a structure point. Again, I have to combine it with the time of day, Bill. So I'm looking at when am I getting into the trade. So I'm not going, if it breaks this at lunchtime, for example, I'll be waiting, but I'll also, but primarily as soon as it breaks the entry point, now I am focusing on going short, and I'm trying to use all the techniques that I have in order to time my entry. But my bias is clear. So below the structure point or below this, I have no choices. The only choice that I have, either I'm going to take it short or I'm going to no, genius. I have been trading before all these guys have been born. Okay? And stop and reverse is the worst system in the world. Do not ever buy or trade based on stop and reverse or support and resistance. You cannot. You might as well go and look at the webinars, because you cannot buy support and resistance all the time. You cannot. There is an art and understanding of buying support and selling resistance. You cannot do that every single time of day or every single day. There is a reason when to buy support and a reason when to sell resistance. So the structure point for the euro dollar right now is the 134.46. No, it becomes, listen guys, okay, this is a good point. This is a very good point. Let's focus on this for a minute. Genius. And the guys that I want to ask you a question. What is the definition of an uptrend? What is the definition of an uptrend? Come on guys, quick. Okay. So an uptrend is the classic definition of a trend, of an uptrend, is a series of higher highs and higher lows. Yes, Jack, I'll give you the structure point in the euro is the 134.46, and the one below it is the 133.37. So let's do this, guys, quickly. So we have identified that a trend line, an upward trend line, is a series of higher highs and higher lows. Okay, do you see this, guys? This point, of course, you will all agree that this was resistance, and we should, if we shorted it at 144.20, we would have made a lot of money. Do you agree, guys? If now I'm getting into a trend to the upside, so you see the market came back and it's sitting right there at the 144.20. Now, this is the $64,000 question, guys. Should you buy it there or should you sell it? Should you sell resistance or should you, and this is anything, I just pulled up a chart and I'm just showing you. Should you sell resistance here or not? The reality, and that's exactly buy if broken, yes, exactly. So this, okay, brilliant guys, brilliant. But here let's put it in a pragmatic way, in a way that we actually have to use this to make money. Okay? If I come in with the conviction that I am going to sell resistance, then I'm going to sell the first momentum high in an uptrend, because the trend says series of higher highs and higher lows. This means if it is a series of higher highs, then it will take out the previous high. A high is resistance. Okay? So you cannot, so for example here, in this case, at this point, you might have had a slight pullback, but right there, if you would have bought it right there, you would have lost a great deal of money. So what you need to do is identify the price point, and that is something like the structural point. And we say, if it gets above this, then I'm going to be a buyer, because now the market is telling me I am trading above that resistance and I'm going to take it up. And the same thing for the downtrend. Now okay, here is another resistance, guys. Here is another resistance. Now, do you want to buy it here? Come on, quick. No, you can't say buy above. If you have seen the seminars that I have, absolutely, I will buy it right there with my hand, with my blindfolded. Because now it is the market is already trending, guys. That is a market condition. You need to know what market you're in before you trade. If this is now a trending market, this by definition it is going to make higher highs. So if I'm in a trending market, selling resistance is suicide. You need to decide how you're going to trade. You cannot trade by saying I'm buying support and selling resistance. It's like driving a car on a highway. You cannot say, if you're driving on a highway and the traffic is clear, you can do 65 miles an hour or 100 miles an hour. There'll be no problem. You're driving on the Autobahn in Germany or whatever it is, you're stepping on the gas and you're moving. But once you see traffic lights ahead of you, brake lamps showing you that they are exactly able, that's when you have to buy the pullbacks when they inhale. Exactly. That's it. Why? Because you're in a trend and now they're not changing their minds, they're only inhaling. Now you need to jump in and buy. Exactly. So you have to first identify what kind of market you're in. You cannot drive 65 miles on the highway and then come into the city, into the congestion, especially in London, and still believe that you're going to do 65 miles an hour. If you do that, you're going to have an accident. So you have to change your style of trading based upon the market condition. If I am in a trending market and the market is moving up like this, I will be, you're welcome, I will be buying resistance, and I will be, if its trend is down, I will be selling support. If the market is moving in a side pattern, then I will buy support and sell resistance. But the key is, that's what we teach you guys in. I mean, the key is how to identify. I mean, it's beyond but that's it. You look at this, you buy it right there, you got the move. If every time, of course we identify the bottoms, we identify the reversals. Absolutely. There are all these are classic. If you understand the theory behind price behavior and what is price is, and what is the information that the price will give you, you will be able to identify the pullbacks, you will be able to identify if it's going to change its trend, you will be able to identify what is happening. I'm trying to read what, so that's the key. You need to know. So for example, let me just do one thing here before so guys, I want you to, let's do this. So right here we bought it. If you would have sold this resistance, you would have lost this amount of money. But if you bought it over here, this is the amount of money that you would have made. So let's do this. This is now the resistance that is pulling back. So who was saying anything about inhaling? Kenya. This is turning around. Is this changing direction or is it inhaling? it is just pausing, it is inhaling. So I am now looking to find a way to buy it. And my buying point is going to be, definitely in this case, if it gets above this high, above this resistance, I'm buying it. You had a small buy right there, so if it's coming back again, I will take it again, buy it again. And you buy it. So you had a little bit of a move to the downside. But let me show you this. This is your support now. You go short below this support. Now you have a trend change and the trend is coming down. This now becomes your new support level. You want to break it below this. If it breaks below this, you want to go short again. This is now a new support level. So instead of buying these supports, you're selling these supports, because now that we have a structural failure that the market is trending down. So you take it and now and it keeps, this is another support. So in a trending market, let me write it for you. You buy resistance and you sell support. The style of your trading or how to approach the market depends on how you're able to identify the market condition. Yes, of course, Harry. Exactly. Absolutely. And that's what we do all day long. And you identify.
Order filled.
Okay, I got stopped out in the euro, which is no big deal. Came back above the other side. Again, we're going to wait. This is a structure point, so this maybe this is a little bit too much. I'll wait for it to come back. Why? Because I have a lot of indications that the dollar is still strengthening. So, for example, the pound dollar, it is back in the range, so it's sitting at the 159.80. This is a structure point. A structure point is a decision-making point. A lot of people are scrambling around it. The 134, again, I will take it again. If it comes below it again, I will take it again. There is nothing that concerns me about whether the trade made money or the trade lost money. My job is to do the right thing. My job is to do the right thing, not. So I'm going to short it again below 134. The pound dollar, the euro pound, euro pound, the euro pound, and this is what you can see on the radar screen. That stuff, I mean, we do that. You can pick it up on. So for the euro dollar, we're short below 134. This was this morning from 134.96. And the structural point is 134.46. So this is the first short in the morning. The 134 would be the trend change, and we will be taking it to the downside. I see you are quite an intellectual genius. You know a lot of things about the. What we do here is, I'm very proud to say, is kind of unique to us. Price behavior, we're the only people that use that. There is no secrets in the market. The difference between what we do and Elliott Wave 5-way structure is that you can put a chart in front of an Elliottician. You take one chart and show it to 500 different guys that follow Elliott Wave. You'll get 500 different opinions. That we don't do. We have definite and precise entry points. And if it fits, if it falls and it agrees with somebody that used Elliott wave, then fine. If it doesn't, I don't care. I'm not trying to prove anybody wrong, and I'm not trying to prove anybody right, and I don't care. What I care about is at the end. So it's not who's right or who's wrong and what is the philosophy behind it. Is it Elliott wave? If it is, it doesn't matter. I'm not interested. What we want to do is to make money. The courses are held in London, and you can take it on course online, Jack. So the pound dollar, let's see the pound dollar. I mean, you know, the people think that trading is much simpler. Matt, there is a Jack on. Okay, here it is. So trading is much simpler. It's not complicated. Okay. That's fine. God bless you, genius. If you're making money, God bless you. That there's nothing that makes me more happier and proud of you than that. That's what it is. Each of us, each is his own, and there is nothing wrong with that. Put the phone number, Matt. At the end of the day, each of us, put the phone number, Matt, will you please? So each has to do what he wants, his style of trading, and based on your style of trading, you can, but as long as you're comfortable with your style and as long as you're making money, that is all what counts. I don't know what I did over here. Anyway, so when you're trading, you're not competing with people you're in the market, you're competing against everybody in the market, you're competing against everybody that is trading on the other side, and then we're trying to find a way to make money. And the best way I can make money, that I'm taking it from you. So I'm trying to find out how or where you'll be making a mistake, where you're going to be erroneous, and I'm going to exploit your errors every single day. Have I done millions? When you come here to London, I'll show you. I've made millions and I lost millions. So hold on, let me have a couple of questions. Somebody's asking about the turtles. The turtles, guys, you're very welcome. The next Saturday, we are going to be doing the online test for the traders that are outside the UK or who are outside of London. Let's say. So we're doing it on Saturday. Hey, Louise, we had 8,000 people. We had to be fair. I didn't expect that I'm going to get 8,000 people. I was looking at a couple of, 1,000 maybe. But now you have to be fair, and you have to make sure that everybody has an equal chance. And we have to also, we're trying to find the best traders also that we are going to give us the best because it's training traders, I'm sorry. Because this is not a marketing promotion. This is a recruitment. We're trying to recruit 10 people to come in, and I'm so confident in the way we trade that I am taking 10 people from across the world and I'm giving them the money and let them to trade, because I am convinced, and I'm the first believer in the results of this system, and I'm the one that's the company is putting its money behind its mouth, and that's what we do now. Okay. I hope so. I really hope so. I mean, I'm trying to, I wish everybody to become a good trader, Louis. Okay. No, I did. Who says 1 to 1,000? No, I mean, if I'm defending, oh, now I understand what you're saying. That wouldn't be fair. We're having, also we have a secondary program that some traders that are not or have not been chosen, that they want to come in and become with the turtles. We're not going to be charging them for the training or for the education. They will be charged for the cost, which is the actual real estate of sitting on a desk. But they will not be charged for the education. They will be trained on forex, futures, stocks, options, the whole 9 yards. So anyway, what discussion of schoolboys? What are you talking about? I'll contact, send an email and we'll address it, because we didn't. So anyway, okay. So anyway, is that available? The ones that they're going to pay for their pay their way, if you will, just for the real estate, yes, it's available. We have only 15 seats left. The online test is going to be like a couple of hours, so you can take them and feel free to them. Yes, sure. I mean, just come, guys. I mean, this is not a sales pitch here. I mean, this is not the sales. I'm trying to show you something. I mean, feel free to contact the company, and they'll be happy to answer your questions. Anyway, so based on this, the ones with the stuff that is still looking at. Oh yeah, they will be sitting all in the same room, in a blocked space. They will be working. It's a job. It's not a contest. It's a job. It's a job. And these guys, the ones that are going to be, hopefully the successful one, they are going to be the leading traders in the fund that we're starting our fund. Every day, morning and night, it's a job. If you're not willing to work as a job, then don't come. Unless you want to pay your way, that's fine. The 10 we're financing, they are going to be, it's a job. They're going to get a monthly salary. They're going to get money to trade with our money. Nobody has done this before. Okay. All right. So let's see. When are we, till what time are we going on? The online test is 2 hours. It's going to be 2 hours. Okay, so we have another half an hour to go. Now, if you look here, you see that the dollar yen, or the dollar, is beginning to ease up. Let's see what the dollar yen has reversed. Call them, guys. I mean, it's not good for, FX Street shouldn't be happy about it. Please, just call the office. They will answer all your questions, guys. So, well, you're looking for a trader that is not somebody that is smart, somebody that is willing to, is a decision maker, somebody that is willing to take calculated risk, is a risk taker, willing to take calculated risk, not to jump in and out of somebody that doesn't talk too much, doesn't think that he knows it all. You don't want to know it all. The guy that knows it all or has all the answers or whatever, this guy is going to be a waste of your time or my time. You want people that are willing to follow the rules. I'm going to give you my money, you're going to trade with it, so you're going to do as you are told. As I said, you have to forget the old way of trading, and you have to follow the rules, and these are the ones that we basically are looking for. And since you are not going to be taking any loss, then we're covering your losses. So you have to follow the rules. Okay. So again, the question, the test is not designed to be. You got 64 questions, true or false, and you got 25 questions which are basically one-liners. You write a short answer for them. Is next Saturday. Next Saturday, guys, we're going to send an email for everybody. Exactly. It is this way or the highway. If you come in, number one, we don't want people to become carbon copies. We want people. To me, trading is like a doctor doing surgery. Okay? If a doctor is performing an appendectomy, he has to perform the appendectomy every single time in the same way. He's not going to improvise operating differently on every patient. That is why he becomes consistent and he becomes a successful physician or a surgeon. The same thing, what I want from the trader, that to follow the same rules and his responsibility is how to follow these rules. But if somebody is coming in to improvise on every single trade, then there is no way he's going to be consistent. You know, the biggest challenge that most traders face is, and everybody will tell you this, you have to be consistent, you have to be consistent, you have to be consistent. Okay, that's fine. Yes, I have to be consistent to make money. But how can I be consistent? You have to show me as a trader the method and the means that I can be consistent. And then I will be consistent. And that's what we do with price behavior, is not the system, the methodology. The system is nothing more than taking the methodology and turning it into a code. But I'll show you something. Let me show you something here. Okay, look at this chart. Remember we were talking about buying support and selling resistance? Now guys, we're talking buy support, and I told you in a trending market, we need to be selling support and buying resistance, right? Now, which way is the market here? Is it up or down? So in this market condition, guys, we should be buying support or selling support. If this is my support, should I be buying it or selling it? I'll be selling support. And look here, when I put the software on, look at the price here. This is where it broke support on January 14th. And it broke support at the low of the day was 78.97. So now you know, when you see this chart and you see it coming here, you know, guys, that you want to sell support right there. And then when you put the software on this, because it follows the same rule, you will see that it went short at 79.02 right there. 79.02. The support, the structure was 79.05. Now, because the market condition is down, it broke the support. Now we should be shorting it, taking it at 79.02, and thank you very much. Goodbye. Okay? So the idea is knowing and being precise. The software, exactly, I can pinpoint with my finger where will you have a buy and where will you have a sell on every pair, because we know exactly. There is no algorithms. There is no if this moving average crosses above this. These are all subjective things. They're all delayed. And there again, it's like the Elliott wave. No two traders can agree. Yes, after the fact. they can agree, but before the fact to make a trading decision, nobody does. So, and that's why we follow this methodology, because at the end of the day, it pays. Now, right now, my selling point, my stop is right here, but that's too far, so I'm going to give it a few more minutes. If it doesn't get above the 36, I'm going to close it. Absolutely, Bill. We teach stocks here too. You can trade stocks, you can trade long term, you can trade short term, you can trade futures, all the same. You don't specialize in driving Volkswagen. You don't specialize in driving Minis. You drive anything. You learn how to drive, you learn how to trade. Then you specialize on finding the instrument, the subtleties of the instrument. This is a big engine. This is what is the pip size? What is this? But you follow the same methodology all the time, unless if it's a truck. But we still can teach you also to. But you drive all cars and trucks. You drive one slower, one is bigger, one. But again, yeah, God help me if it's a minivan. All right. So anyway, let's see what's happening in the market. I mean, the kind of dollar is. I mean, there is nothing moving. Just 8 pips. The pound yen is only down 1 pip. The pound Aussie. The Aussie is the only one that's moving. And it is not a buy, even though the Aussie is up this morning, but we don't have a buy signal yet on the Aussie. Okay, for the dollar index, okay, again, you would see that we all know these numbers when we're trading. The 79.05, this was the latest break over here, and now we are coming back to it. If it goes back above the 79.05, then you will have a turnaround, already we have a turnaround right now, and we should break above the 79.05. The trend is still going to be down. This is the trend changing point, the 81.42. Okay, or actually no, this is as stand corrected. The 80.82 is going to be the structural reversal point in the upward move in the dollar trend. Okay. Oh yes, of course, we trade the end of the corrections because this is what we call the gift trade. The correction is what I call a gift. It's a gift from God. I'm given a second chance to get into the trade. I don't want to buy the peak. I don't want to buy the momentum high. So if I buy the exactly, so that's the gift, and that's what I'm looking at. We have techniques that we train you on how to take. Actually, when you come to the course, there is one of the setups that we teach is called the gift trade. And the gift trade is buying these corrections. We have specific techniques to identify them, how to enter and how to pinpoint when the correction is finished and when to buy. This is the other way we trade also. This way we have a global market. So every session I rearrange it. So for example, now I'm putting the Aussie dollar like this, and I'm putting the euro dollar. So basically I'm putting all the dollar pairs, and then I'm going to put the Swiss pairs like this, and then I have the yen pairs. So you can see 3 charts aside for the dollar pairs, 3 aside for the Swiss pairs, and 3 aside for the yen pairs. And this way I can make a judgment call on strength or weakness, and I can gauge my if the strength is primarily in the dollar yen or primarily in the it depends on the trader, genius. I mean, if I can give you a pill and put the stuff in a pill, maybe I can guarantee what your performance will be. But I can put you in the trade, but I cannot take you out of the trade. You can buy it, I can tell you to buy it right there, but you're the one that is going to decide when you're going to exit. So the trade has an entry and has an exit. You have to be able to do both. So that's why it's up to you. Your tolerance for risk, your tolerance to be scared, your tolerance to take profit. Everyone is different. And that's what we're looking for in the traders, that the turtles that are going to come, is that we want people to become statistically, at least follow a statistical edge, so that they are going to become winner. But thank you, Carl. So you have to be what was I saying? Well, fine. If you're swing trader, there is nothing wrong with that. It is your money at the end of the day, Carlos, and you're the one that. So you have to do the trade that you're comfortable with and the trade that you can make money with. Okay. So there is no whatever you are comfortable with, Carlos, that's what you want to be doing. Thank you. It depends on. Here is what we do, genius, so that number one, first of all, guys, I believe that trading is a skill. It is not something that you can learn in a 3-day seminar or a 5-day seminar. Okay? There is no secrets to millionaires. There is no this proprietary stuff. There is no this blah, blah, blah. It just doesn't exist. This is like playing the sport, like playing golf, like playing tennis, like playing any skill or driving a car. The more you do it, the better you become at it. We give you the rules, we train you on the rules, and then we need now to monitor you to become successful. This is what we do. Anybody that comes into, exactly, but we don't give you, this is what we do with everybody that comes and takes our courses. We have an online trading session that is open every single day from 7:30 in the morning Greenwich Mean Times. So every day at 7:30 I'm in the room. They see exactly what you guys are seeing. Okay, every day at 7:30 in the morning. And what we do, we try to plan our trades going in. So we look at the radar screen, we look at the previous session. We have all the traders from all over they come in, and we plan our trades between 7:30 to 8 o'clock. We know what we are going to be trading in the following session. And this is no, the turtles are going to be much more. So let me finish the. And then at 9:30, I leave the room, but somebody is looking at it, so we can keep an eye on your trades. And we trade live. This is a live trading account, so I'm not going to tell you where to buy or where to sell. I'm actually going to be taking the trades with you. So if you come and ask me, like this morning, somebody was saying about the euro, should I go short the euro or go long the euro? I did not tell him or her this morning what to do with the euro. What I did is I went in and I believe that it should be a short. I took the short. And then at 12:30 Greenwich Mean Time, which is the beginning of the New York session. This session that you see, guys, we do it every single day. So you take the course, and then you have this room. We're with you in the room for 30 days, holding your hand, reminding you of the rules, explaining. It's, again, guys, I'm not doing this to sell the course. Contact the office, guys. So just contact the office, and they will give you all the answers you want. Okay? And then after that, after we're done with the, at 2 o'clock we end the day. So the session is open, as I said, the room is open practically 24 hours a day, and we're holding your hands until you are now. And that's how you begin to learn and how you become successful in trading, by developing the skill. So somebody's talking about the pound Swiss. Exactly. Try. I love your name. Exactly. That's why we do that with you, because again, that's why the software in a way complements you, because you know the rules. So instead of paper trading, then the software will confirm to you that this is the right sell and this is the right buy, but you know exactly what it's doing. And okay, the pound Swiss, you shorted the pound Swiss. Okay, anyway, if it doesn't break, okay, it is. I mean, this is our plan. This is as I said, every Saturday we do this plan. So we put here, this is where we're going to buy, this is where we're going to put our stop, and we were planning to short it. We're planning to short it from here. This was the plan for the short, and this is where we're going to put our short stop. So this way, whenever you pull the plan, you can see. So it is a good short, but you don't want it to go back above the 155.70, because again, this trend is still up. We don't have any trend change as of yet in the pound Swiss. The pound Swiss is still trending up. It will become, and you will see this, it will become a trend change to the downside below the 155.20. And here on the radar screen, you will see that the short point is the 155.20. I deleted the stuff when I was doing, but this is it. We're selling it below the 155.20. This is our short entry, and we should be looking for it. The big trend change is going to be below the 154.30. Okay, so again, you just want to make sure that it breaks to the side. This is still an inside day. You want to make sure that it breaks below the 155. You want to make sure that it trades below 155.20. And that is our selling point, the 155.20. This means if it goes below that, you should be getting capitulation to the downside. Okay? Just don't let it go back above the 155.7. Okay. 5 years. Okay, thank you, Vicky, very much. Thank you, guys, at FX Street. I hope you enjoyed today, and I'll see you next month. And, okay, guys, thank you very much. Take care. Okay, Matt, you can call me tomorrow, no problem. Okay, why don't you come over here, let me see you. I like your tenacity. Trader Soros, whatever that is. I can't. All right, guys, take care.